Many thanks for your time today on the marketplace. My name is Emmanuel Abuaji Riafe. Now, oil exploration firm Tullow is expected to lose about $400 million in revenue following a cut in its end-of-year projected production. The exploration firm has been forced to review production targets for the year due to some gas rejecting problems and exports to Ghana National Gas Company. The move has already forced the group's chief executive and director of exploration to step down. But Executive Vice President and Managing Director of Tullow Ghana, Kwekwe, tells Joy Business new strategies are in place to turn things around from next year.
This year, 2019, Tullow will produce from Ghana annual average about 150,000 barrels, and we will generate, this is for us and the partners, and we will generate $350 million of free cash flow. Next year, even despite revised downward guidance, we will generate $150 million of free cash flow. Now, that doesn't sound like a company that is in distress. So I would say that the numbers alone should suggest that we are not in distress. I'll get to the second part of your question. I think the challenge and the difficulty that has occurred is that we actually forecast much higher numbers. Not just 350, but 700 million, not just 150, but 500 million. And that is where the discrepancy and the challenge to the credibility of the company came from. Why did you predict this number or forecast this number when actually you're getting only 150? So it's very much about expectations and expectations management. And that's where, as a publicly listed company, you get punished. Because it says, you know, you didn't do your forecasting well, you didn't do your planning well, and it raises questions. But fundamentally, the assets from which we are producing Jubilee and 10 are still very strong. I mean, the news was actually Jubilee has shut down and Enyenra is closing, that's a whole different picture. But that's not the picture that is being painted today. In terms of whether the company is for sale or not, I think we know for a fact that when our executive chair was asked that question, if you like, out of context, she said yes. But she also said, if you read the transcript, that actually every day a publicly listed company has to entertain offers. That is the job, fiduciary duty of any board of directors. Now, if you take that point of view and you say that, well, you know, what Tullow is doing today is no different from what Tullow did a week ago, and yet the share price has gone from, say, £1.40 to 40 cents. That does reduce the valuation of the company, and it's a great arbitrage opportunity in terms of what the real value is in the ground versus what the market is saying it is. So, understandably, it is an opportunity for others to think this could be a takeover target, but that doesn't mean that the company itself is actively looking for buyers, because really the company doesn't feel it needs to find a buyer.
Do I get from you that these problems that were identified this year are something just that can be tweaked as a production thing, and therefore next year we should expect some exciting times, and these are not things that are going to linger on?
As I tried to explain earlier, we made those forecast projections on the back of a very successful drilling program a year ago as we continue to increase production. And, you know, the natural instinct of most organizations is that as we increase, we can do more. As we increase, we can do more. I think what this year has forced the company to do is basically to stop, take a deep breath, and reassess. And, you know, that assumption of just continued upward progress may not have been the right one. And actually, we needed to take better account of the risks that we actually had producing oil and factor them in better than we did. So we've really spent the last few months doing that exercise where we say now, you know, are we taking proper account of those risks? Are we factoring them in properly rather than just saying everything will just continue to improve? So I would say that it's not just a tweak. There are substantial reductions in our production guidance, They are several thousand barrels a day less, but equally, it's not as if all of a sudden the production will go from 100 to 0 in the next 5 years. What we've seen is that we can maintain production on a stable basis for the long term.
So let's stay still within the upstream sector of the petroleum industry. Local participation in the oil and gas sector has been the priority of government over the years. Although the law requires at least 5% equity participation of locals, experts say they are struggling to find competent persons to fit local positions. Speaking to Joy Business following a recent announcement of significant oil discovery offshore, founder and chief executive of the Springfield Group, Kevin Ochre, said it will take time for the country to have full local participation in the sector.
Springfield is looking forward to how we can actually bring this field into production one way or the other, because at the end of the day, we can add a lot of value to the average Ghanaian. I mean, we've had community investment projects way before we started drilling, way before we even set up, way before we even got the oil block. But this will enable us to touch more lives, you know, as a company. And I believe that it will also enable us to the government to get more revenues for its social intervention projects and for its infrastructure development. So that is what we are really looking forward to, you know, getting to the tail end. It's going to be a lot of hard work, but that's why we are here. And, you know, we strongly believe this is going to inspire Ghanaians and Africans that whatever we put our mind to, we can do it. So that's what we're looking forward to, the amount of people that we inspire in the years to come. We're doing our best to build capacity, but yeah, we are, you know, a homegrown Ghanaian company.
But a lot have also said that, yes, there's this campaign for local content, but when you're looking for competent people with skills, and certification is really key when it comes to the oil and gas sector. And so you're looking for people to work with. Yes, we are pushing for them, but do we have the requisite people? And has the system allowed you, I mean, your operation so far, is it a challenge coming across people who are competent to work with?
I mean, truth be told, Ghana have only been producing oil for 9 years, so we are still at very infancy stages. So yes, there are a lot of Ghanaians who are experienced in this industry. However, they work for multinationals. They've left the country many years ago, but some have come back. Some are in Tullow. We have some ourselves. However, this is an industry that, you know, you need the expertise that's needed to do this cannot be compromised. If you look at Norway, I believe the Americans are the ones that built Norway's oil and gas industry. And over several years, it takes a long time. It takes a long time. I mean, we have people that have 35 years experience, and you can't easily replace that. So that's why we've made a conscious effort to be sure that all the experts that we have are training Ghanaians. It takes time. It's going to take time. It's working in progress. It's going to take time, and you cannot compromise because of local content. Because if you make a disaster, if you make a mistake, it can be very disastrous to the environment, which we don't want to have that.
Time now to get downstream, and the Chamber of Petroleum Consumers Ghana (COPEC) is calling for the immediate withdrawal of a memo by the National Petroleum Authority (NPA) to all petroleum service providers to further increase some elements on the already high petroleum price build-up and fuel prices. Per the directive, the controversial BOST margin has been increased. According to COPEC, the NPA has directed all oil marketing companies, OMCs, and LPG marketing companies to apply an upward review of a combined 4% increase to Ghanaian pump prices. COPEC says it will not hesitate to go to court on this development because the NPA has no such authority to impose new taxes, levies, or margins without appropriate approvals by Parliament. Let's go on the phone lines now and speak with the Executive Secretary of the Chamber, Duncan Amwa, to give us more clarity to this issue. Good afternoon, Duncan. You're welcome to the marketplace.
Good afternoon, Emmanuel. Good afternoon to your viewers.
All right, so Duncan, tell us, what is your main beef with regards to this directive that has been issued by the NPA?
Emmanuel, I'm struggling to actually put together your question, but if you are asking about the statement we issued last night,
yes,
it is in respect of a memo that had been issued by the National Petroleum Authority on Friday, instructing oil marketing companies to charge or apply some 4% extra charge to your fuel as of today, the 16th of December. Clearly, that would have been the most insensitive thing for anybody to even think of, bearing in mind the fact that fuel prices had gone up just a week ago, and Ghanaians from different walks of life had expressed some unhappiness about the way our fuel price only seems to go up and the sort of harsh implications it's having on our pockets. Clearly, this was coming from the back of the fact that officials of even the Bank of Ghana and Ministry of Finance and some senior government officials had indicated they were going to work very hard to even make sure that the 5 pesos that was clapped on us last week gets to be redrawn at some point, only for NPA to now come back to say Ghanaians should go and pay 4 pesos more at the pumps effective today. That clearly was going to be a slap on sensitivity, and again, that whole action was completely illegal. And we are happy with the fact that some senior government officials have stepped in, and the government itself has taken a decision to reverse and withdraw this particular move by the MP.
Now, Duncan, you know, some experts or some people are saying that this call may have come at a rather, too late, because this particular levy was approved by Parliament about 2 years ago, and people don't know why the NPA did not implement this. So why are you now calling for this withdrawal?
Emmanuel, I do not think any Ghanaian anywhere, judging by the little history we've had with BOST, would say that the biggest problem for BOST at present is money. The biggest problem for BOST currently has to do with sound management practices. It cannot be said that all the wrongs, the rot, all the plundering that has gone on at BOST, authorities have not heard nor seen. It cannot be said that the sort of profligate expenditure that we see with BOST should be allowed to continue while we come back to the trotro and taxi drivers to ask them to go and pay more. So clearly, this is one thing that a lot of Ghanaians would raise objections to. And then again, you're also looking at the season. Look at the time of the year when parents will be expected to turn magicians and be able to take care of families here and there, provide clothes, and then be getting ready to even pay school fees as far as those in the junior schools are concerned. And so if you pile this sort of pressure onto us using BOST as a facade, I do not think that anybody within the country would agree with it.
Now, it looks like there would still have been some sort of discomfort, irrespective of the time, because 2 years ago when it was approved, if NPA has decided to implement it, it will still cause discomfort to parents and other people.
I do not get where you come with the approval bit, but clearly we are not aware of any such approval given by Parliament. Our checks with parliamentarians, both on the Subsidiary Legislation Committee and the Finance Committee, indicate that nothing of the sort had come before them. So they are unable to just put their heads around why NPA would want to apply this at this point. So clearly, it doesn't look as though Parliament has even had any proper discussion on this matter, except for the fact that a memo is instructing oil marketing companies to apply this. Again, I do not also think that even Parliament would, at this point, think that all the monies that we've invested in BOST, if you did look at the calculations we put out there, over 10.2 million Ghana cedis is what you and I contribute monthly to the operations of BOST. BOST was initially set up to serve as a strategic storage stockholder whose main job would have been, when fuel prices are going up on the international market, we will get stocks released by BOST, at least to forestall any increases that you and I would have suffered. Today, BOST is an active player downstream. It becomes quite difficult to even understand why any trotro driver or Ghanaian will be asked to pay a certain BOST margin, which is 3 pesos at present in the first place, talk less increasing from 3 to 6. Clearly, we need to have that debate as to whether BOST even deserves any margin or any money from the trotro person, considering the fact that other private depots within the country are able to operate and pay off the cost of these tanks. BOST is not paying anything for their tanks. All that they have to do is to get monies that they charge for throughput and then their own trading businesses and use it for their operations. If that they cannot do and they are demanding for more from you and I, then that will be quite unfortunate.
All right, many thanks for your time. Duncan Amwa, Executive Secretary of the Chamber of Petroleum Consumers, Ghana. Meanwhile, Managing Director of the Bulk Oil and Transport Company, BOST, Edwin Provençal, has been justifying the 100% in BOST margin of the petroleum margin. The levy, which used to be 3 pesos per litre since it was introduced in 2012 as part of the energy sector levy, has seen an approved review of 6 pesos per litre in 2017 by Parliament. It is rather unclear why the National Petroleum Authority did not implement it at the time. Mr. Provençal explains the increase is important as it helps to maintain their equipment.
The BOST margin historically has played a significant role in the development and maintenance of BOST's infrastructure to date. As you are all aware, the current 3 pesos was as of 2014 or 2011, was approved in 2011. I'm sure you can attest to the fact that inflation alone would have eroded these 3 pesos. And I'm sure that accounts for the state of our current infrastructure. The doubling of the margin to 6 pesos was approved way back in 2017. It's yet to be implemented. But the BOST margin is extremely critical that if for nothing at all, the existing equipment would have to be maintained. And that is the margin we can use to maintain this equipment. So the BOST margin, to answer your question, yes, it's very relevant for our survival. So it means that in order for us to be relevant and make money, we need to leverage on our assets, especially the assets in Bulga, which is positioned for export. We need to leverage on that to export a lot of our products to the landlord countries. You can talk about Burkina Faso, Mali, Benin, Niger, etc. So that is true. And then in terms of strategic reserves, we hope to store, always maintain 12 weeks of strategic reserves. So in a nutshell, we're going to be operationally efficient. By doing that, we're going to be number 1 in storage and transportation, and we're going to be aggressively export-oriented. The benefits of doing that is to be able to generate enough IGFs and for once pay dividends to the good people of this country.
Now, away from that, former Deputy Minister of Finance George Wickett-Hagen is questioning the sustainability of the production at the Kofi Juice factory. He said even though the concept of the one district, one factory is great, the modalities of its implementation is wrong, adding the Kofi factory lacks basic infrastructure to survive. Fruit juice from the factory is expected to hit the local market this week with a market value of not more than 1 cedi 50 pesos. The lawmaker has been speaking to Joy Business following the announcement.
You look at so many things before you situate a factory. You've got to look at where your raw materials are coming from. If you produce, where are you going to send it to? Are there things that you are going to export? What is your access road to that factory and your road to the port if you are going to send them to the port or to the cities and towns? Do you have water in where you are going to put the factory? Is there enough water? Is there enough power? Yes, we have a good coverage of electricity thanks to the NDC, government. But do you have adequate power? Because every factory that you put up has its, power requirement. Some may be high, some may be low. You've got to take all these things into account. Now, is there a factory that you can build in a nearby district that can create thousands of jobs for neighboring districts to be able to go there and work? Is there a way we can create industrial parks where you can basically put the industries that you want to put together at one place where they will be able to benefit, from economies of scale and from being able to share a lot of things so that when you put the infrastructure at the park in terms of water, electricity, and all the things that these factories are going to need, people can then come in and set up their factories and be able to access all these things for them to, rather than put a factory in some remote place where probably water doesn't reach there, but the factory you are putting up actually needs water. So then you increase the costs, because in that case, you need to get the water there. If there's no electricity there, you need to get it there. Certain basic infrastructure that is not there needs to be there. You can put 20 factories or 30 or 50 in a location that will benefit from the same power, the same water, the same. And you could move people to be able to work in these places where conditions will be better than to put up factories basically anywhere just to take your boxes that you put a factory in a district, even if the factory doesn't work. It's absolutely wrong. I mean, the concept, as I said, is great, that we need to industrialize. We need to turn Ghana, as I said. We are a commodity-based economy. You know, we want to turn Ghana into a manufacturing economy. In the process of turning your country into a manufacturing economy, you industrialize. That's what industrialization is about. Okay? Now, the idea, as I said, sounds good, but the manner, the modalities, as you're talking about, completely wrong. Me, as an investment banker, you know, in my past life, can tell straight away that that's not going to work. I mean, especially when you're going to be based on the private sector.
Well, so that's it for the marketplace today. Many thanks for watching. My name is Emmanuel Abuaji. We have feeders more news when you log onto our website, myjoyonline.com/business. Have a good afternoon.